Salam friends, good morning. Welcome to our analysis of the Australian residential property market. Today we will explore key trends, investment returns and the regional growth and the future outlook for the property in Australia. Australians have a deep connection to property as homeowners, business owners and investors. At times it seems like an obsession than anything else. Today, the market is at a turning point, shaped by rapid population growth and a construction sector that is struggling to keep up with the demand. For many young Australians, home ownership is becoming increasingly unaffordable. Let's look at the investment returns over the past 2 decades. As shown in this bar chart, smaller cities have outperformed the major capitals. Adelaide leads with a 175% increase in median house prices, closely followed by Hobart, Sydney, Brisbane, and Melbourne. For units, Hobart and Adelaide again top the list, while Brisbane and Sydney fall below the national average. Interestingly, high immigration to Sydney and Melbourne has not translated into the highest returns. Many experts believe that government policies such as first homeowner grants, negative gearing, low interest rates, as well as the easy availability of credit have contributed to skyrocketing house prices over many years. And the recent implementation of the fee exemptions from LMI for the 5% deposit also resulting into the sudden spike in demand, which is putting upward pressure on prices. I personally think immigration does play a role in the demand for housing, but it is indeed not the only driving force. Many experts fear that the saving from the fee exemption may be swallowed by the price increases as the demand increases. Now let's have a look at the housing supply and productivity. Australia is facing an ongoing shortages. Governments have certain targets to achieve in next 5 years, and I don't know how they're going to achieve that. So let's have a look at this line chart, which illustrates the projected annual supply of new homes will not meet demand. Planning delays and a significant decline in construction productivity have worsened the situation, even as the broader economy's productivity has increased. Let's have a look at the long-term returns. Over the past 50 years, Sydney has delivered a remarkable 3,800% return on residential property, with Brisbane close behind at nearly 3,500%. However, these gains have come at the cost of reduced affordability, making it harder for many Australians to enter the market. Let's have a look at the regional returns, regional areas of Australia. Queensland has dominated recent growth with 7 of the top 10 performing regions. Gold Coast leads with 154% price increase, followed by Gascony, Maroochy and Noosa hinterland. But in contrast, many inland areas continue to face significant challenges. Now let's look at the sector shift. The property sector overall is undergoing significant shifts. The rise of digital economy is putting pressure on traditional retail, while logistic hubs are emerging as a key investment areas. Transition to renewable energy is also impacting land use, especially in agriculture. The urbanization continues, with Sydney and Melbourne combined population expected to exceed 11 million. Infill development is now a priority, but several questions remain. Is infrastructure investment keeping pace? Will remote work trends persist? Will new investment models such as build-to-rent gain traction? And what will be the impact on regional areas? In summary, Australia's residential property market is dynamic and evolving. Smaller cities and regions are driving growth, but affordability and supply remain significant challenges. The sector is shaped is being reshaped by technology, demographic shifts, and new investment models. Understanding these trends is essential for anyone involved in property investment or policy. We can hope for the best from now on. Thank you.